Everyone, welcome to this presentation of setups. And we're going to start with our company accounting setups this morning. So again, we will navigate to companies, setups, companies, and this morning we're going to start with the accounting. And I'm sure we'll probably get through the accounting, payroll, and operations this morning. This area should go fairly quickly, I'm hoping. So we might be done by 8 o'clock or so, Pacific time. And again, if anyone down in the GoToMeeting control panel, if you go to the bottom of it, there should be a chat area there that you can type in and then send a chat message to me or to the group for any questions that you might have during this process. And you may actually want to send the question to everyone so everyone can read it, and because that might prompt someone else with a question as well. So, all right, so the first section here is setup and processes. And the first tab here, identification numbers, that's pretty simple. This is just simply your contractor's state license, your federal tax ID, maybe your state or local tax ID. So that's pretty simple, standard, was in the your old system as well. Under processes, this hasn't changed too much either from prior versions of CMIS, but this will be a good reminder of what we have available. So the first area is our method of accounting. And most our clients will be on a percent complete and accrual basis, meaning that your accounting is based on percent complete of your projects and your accrual basis, meaning that you're recording your AP and AR onto your financials. So we basically have the standard accrual or cash-based accounting methods here, but then we have three flavors within each area. And the first one is we refer to as straight, and that is what hits your trial balance will be all your AP and AR, but we're not going to be doing any percent complete like your WIP. This would be if you're not going to be using WIP on your financials. The second one here is completed contracts, where you don't record the income or the expense of a project until that project is completed. Then it hits your financials. And then the last one is percent complete. You'll be utilizing your WIP report to do your percent completes. And as we get to the point where later this year where we're rewriting the MAA and payroll area, this is going to have a much stronger effect on your financials. We're also going to try our best to be able where you can, probably by the end of this year, we'll have the ability where your financials, you could run financials on an accrual method as well as run them on a cash method. The other is a setup on which GL codes to use to pull from, and this is over in MAA, when you, let's say if you do a vendor invoice, the detailed GL code, where is that going to get filled in from? And obviously you can overwrite it, but where do you want the default to come from? And we basically have three places where it can come from. Either cost codes, we assign GL codes to cost codes, or from contacts, which most clients do, they will assign a GL code to that contact. And then the last one is from projects, where that GL code will come from that project, which is somewhat of a unique scenario. That's basically used when projects move from one process to another. You may have a project that's site development, and then you want everything to start going to another GL code once the site's been developed and you actually start construction. And when the construction is completed, you want it to, all your expenses post-construction would go to another GL code. On the reporting area, a lot of you know that we have the feature in the trial balance where we compress your trial balance detail. And this is where you tell it at what level you want to compress your trial balance. In most cases, it will always be to the job level, but you may want it to the job group level or the division level that you have above the group level. When you set up a job group, you set up divisions in that job group, and you could roll it up, clear up to the division, which would really shrink down your trial balance. But usually for auditing purposes, you want it at the job level in case you have to do a trial balance search and you want to compare it to job costs. You don't want to lose that job information. This other summarized GL up to, for example, your first 3 digits type thing, this is actually used for a reporting purpose. So if you have a GL code that's maybe 5 digits, but the last 2 digits really are subcategories, and the first 3 digits are really what you want to look at. And we just simply have some reports that will give you at that summary level when we have summary level reports back there. The next item here is actually during the check writing process area, and that's a sort order for checks to be printed. So if you want the checks to be printed out in vendor code order, you would select that. If you wanted them to be printed out in vendor name order, you would select that one. If you leave this blank, it'll default to the vendor code order if you leave it blank. And then auto calc the next check number. Most people will have that as yes. So when you click on the process the checks, and it comes up with a little screen that validates, what account you're going to write these checks from, and it gives you the next check number and your check date. This will auto calc what that next check number should be. This last item here is used for discounts. So most of the times, if you have a supplier and you're going to get a discount, because let's say you get a 2% discount if you pay in 10 days or something. A lot of times you don't want that to go on the actual job that project is done, because this is an overhead decision that you're making. This is an accounting decision. And if you're going to take that discount, in most cases, you want it to go to your overhead, not necessarily to reducing the cost on that job, especially if it's a TMM type job, unless of course you have a contract with your client that requires you to give them all the discounts because your client is actually paying you early so that you can get the discounts. But in any event, if you want your discounts to be put to a different job rather than the job that the invoice that you're paying early on is going to, you would indicate what job you want that to go to. You can even make it more granular, and you also want to add the job group code to that. So that takes a little setup. You have to have your job group codes have to be numerically based rather than alpha based in order for this to work. But it's going to, as I wrote in this little example here, if you took a discount on a job that was part of your division 4, instead of posting to 100, job 100, it'll actually post to job 104. So, and it's probably important that it is mathematically adding the numbers together for that. So that allows you to give discounts to overhead, to divisions or groups, overhead values as well. All right, we'll move on to validations. And these are a whole series of kind of how you want, when you data entry over in the accounting side, administrative and accounting side, I should say, what things you want to validate on. The first thing is payables require total dollar input. That basically, we have a little field over there in the invoicing, in check requests and vendor invoices, that you put the total value, the total dollar of the invoice that you're inputting. So if your invoice that you're inputting is $5,000, you would type $5,000 in this field, and then you start breaking down all the line items of that $5,000 invoice. And what that does, it acts as a check. It's literally a accounting check to make sure that what you have entered matches what the total value of the invoice is. And I've had clients that actually by doing that has discovered errors on their vendor invoices because of that. But this is a requirement. If you process lots of invoices that have lots of detail in them, then you probably want to turn that on, because that will be a double check for you to make sure that what detail you've entered, it matches the invoice. The other thing is payables require posting date input. So again, when you put an invoice, a vendor invoice in, you have a vendor invoice date, you have a due date, and you have a post date. And that post date will usually always just simply default to the invoice date. However, and we'll talk about this later in here about dates, but if you closed a period, I've already closed March, so now I get an invoice that's dated March in my payables, so I have to enter it. So I can still enter the March invoice date, but the post date will end up being the April 1st date, the first day after the close date that it can be. So it will get posted in April because you've already closed March. But this is just simply an indication that that field has to have something. You have to have a value in that field in order for you to continue out of the invoice processing on there. The other one is payables require due date input. If this is left blank, the due date will not autofill. So it'll actually be left blank. If you click yes on that, the due date will autofill, and the due date will look at that contact, and it will go back to its contact record to see if you have payment terms in the contact. If you do, it will then calculate the due date based upon your payment terms that you've set up in contacts for that invoice for that vendor. And you can always override that if you so desire. If you don't have anything in the terms, the due date will default to the invoice date. The next one is payables require unique invoice numbers. And we always, actually I think in our system this always defaults to yes. And that will basically validate an invoice number. So you put in vendor ABC Supply Company and you type in their invoice number and you tab out of there, and if that invoice number is not unique to that vendor, then it's going to pop you a flag that says, hey, this is a duplicate invoice. If you don't care about that stuff, you can just turn that off. But in most cases, I would think you would want that on. The other check here requires detailed geocodes. So if you have detailed lines of any type of document that gets posted to the trial balance, it's going to require that you have a detailed GL code. If you turn that off, it doesn't. Now you may ask, well, why would you never have that? I don't know. No, the reason is if you are not posting things to our trial balance, if you're using CMIS purely as a management tool and not accounting, then you really don't want that to be constantly reminding you that you have to have a GL code when you're not using that. And then the receivables are this kind of the same thing. Receivables requires a total dollar amount. I don't think any client actually uses that, but just like in payables, you can put in a fixed, okay, this billing is going to be for $10,000, and you want to make sure that all your line items add up to that $10,000. In most cases for billings, you're always doing the opposite, meaning that you don't know what the total is until you actually do all the details for it. So that's usually always left blank. Again, the same thing, requiring a posting date. Receivables requires due date input. And then the last thing here is receipts requires client's check number. So what that kind of forces in the process is if you record a deposit from a client, this is what turns on or off the little flags that you get with requiring a client check number. So you want to validate, you want to input what the check number that you got from your client that actually is paying that billing. Right, the next tab here is we have some default values. and some are pretty basic here. One is in the project detail area of projects, those are your sub jobs. We have a field called accounting status, and this is where you build what names you want to use for your accounting status. And this is usually used to help you do searches or finds or groupings, because you may want to grab a certain description of your sub jobs and say, okay, now I know these are all houses that are being built. They haven't left the ground. We haven't broken ground on them. So I want to grab all those expenses and I want to see what they are, because I want to make a GL entry to do something else with our financials with it. So that it's really used for the accounting side for you to help in categorizing or putting in groups things on the granular level of sub-jobs. The second field here is information on checks, and we have a above signature line on checks. So whatever you type in this field will actually appear above the signature line area of your checks. And this allows you to kind of customize a little bit more on your check layouts, but most people have their own. I think we've done, most clients have their own check layouts anyways, but this allows you to add something onto it if you need to. This is also the default tax rate. So if you, let's see, the order that it goes is it first looks to the project to see what your tax, because the project usually is the location, which usually local tax rates are based on location. So it first looks there. If the project doesn't have a tax rate on it, then it goes and looks to the contact. If the contact doesn't have a default tax rate, then it goes here to the company to pull the default tax rate if you're tracking sales tax on your line items. And then the last thing here is your special purpose codes, and this you would click in and find your cost codes that fit these broad categories so that CMIS knows what cost code you use to mean bonding or builder's fee or insurance or mileage or overhead or tow fees. At this point, I'm not going to go into all the details of the different reports that are used for this. Some of this you'll see in payroll for it, but what that does, it helps in doing payroll reports, like when we have a cost code for vacation pay. So it knows, okay, well, this is vacation pay, so it knows how to accrue and work with those values.